Welcome to The Explainer. Today, we are stepping into the wild, fascinating, and, let's be honest, highly unorthodox world of W. Gann's trading methods. We're going to look directly at how modern practitioners of this system analyze the markets, not just through traditional financial data, but through a totally unique lens of historical timelines, natural laws, and even planetary alignments. So here's a question for you. Can planetary alignments and 90-year cycles actually predict the next stock market crash? I mean, when we look at the stock market, it usually appears completely chaotic, right? But could it actually be governed by hidden historical timelines and the stars? Let's take an objective look at what the source material claims about this wild intersection of finance and astrology. Okay, let's dive into this. First, we'll unlock Gann's secrets, then look at the 90-year market cycles, planetary forces driving markets, decoding price-time squaring, and finally, aligning your personal horoscope. All right, part 1, unlocking Gann's secrets, specifically focusing on natural causes. To really wrap our heads around this methodology, we have to look impartially at its absolute foundation. Followers of Gann believe that markets aren't just reacting to, quarterly earnings or jobs reports. No, they're driven by natural causes. They argue that price levels literally must align with specific time cycles to signal a true market move. It takes deep, patient observation to spot them. And get this, they actually blend traditional technical charts right alongside planetary positions to find what they believe is the market's true direction. Moving right along to part 2, the 90-year market cycles and historical timelines. Now, here's exactly how they calculate these massive macro events. According to the source, you start way back with the major market crash of 1929. Add Gann's famous 90-year cycle to that date, and boom, you land on 2019 as a critical year. But wait, the methodology doesn't stop there. By bringing in another Gann concept called the square of 12, practitioners adjusted their target date to 2020. And, well, we all know the massive market drop that happened that year. Looking ahead, the source explicitly warns that a 100-year cycle is building up to another massive predicted crisis year in 2029. Which brings us to part 3, planetary forces driving markets. Let's look at the astrological drivers. Now, what's really fascinating here is how we shift from broad history down into highly specific market sectors. Take the pharma stock Ranbaxy, for example. The source notes it isn't just ruled by Ketu, which is a lunar node tied to healing in astrology, but it's actually heavily driven by a combination of the Sun and Mars. And it gets deeper. The source claims that certain planetary combinations, like Mars and Saturn sitting together, take on the disruptive energy of Rahu, a shadow planet. If a trader isn't in a related field like engineering, to properly channel that energy, that combo is predicted to manifest as serious legal troubles. They literally view overall market trends entirely through these celestial alignments. This quote right here really hits the nail on the head regarding their core philosophy. Without analyzing planetary enforcement, you cannot truly know what will happen next in the market. The explicit belief is that if you aren't looking at these natural celestial enforcements, you're basically flying blind. Financial data by itself, that's just an incomplete picture. So the crucial point is coming up in part 4, decoding price-time squaring, or Gann's math. So how exactly do they map these celestial ideas onto a normal price chart? Through price-time squaring. Directly from the source, price-time squaring is the exact moment when the price of an asset hits a specific bottom, or support level, precisely as a calculated time cycle ends. It is the ultimate convergence of value and timing. When these two elements square perfectly, practitioners believe it guarantees a market turn, and that is exactly what gives followers the immense confidence to buy when the rest of the market is in an absolute panic. The source explains there are really dual drivers behind these squares. On one hand, you have mathematical calculations. We're talking geometry, the square of 9, the square of 12. On the other hand, you have natural enforcement, which relies on planetary positions and natural cycles. Interestingly, the speaker specifically calls out a third popular concept, calculating vibrations, as being mostly a myth. They argue that almost nobody successfully decodes vibrations, and traders should instead heavily focus on planetary enforcement and mathematical squares. Let's move to our final section and see how this all builds together. Part 5, aligning your personal horoscope. This brings us to the most individualized, micro-level concept of the whole shebang. The source makes this pretty wild claim. If a stock does not align with your personal horoscope, it will never give you profit. The speaker actually shares a super specific anecdote about this. They totally refuse to trade IT stocks, specifically mentioning Wipro, Infosys, and TCS. Why? Because the underlying energy of the IT sector completely clashes with their own personal astrological chart. They claim that even if they buy an IT stock at the absolute rock bottom price, it will never yield a profit for them personally because of that celestial misalignment. Crazy, right? And it turns out this personal alignment rule applies heavily to commodities as well. The source material offers a very explicit warning. Actively trading specific physical commodities without astrological support can actually ruin aspects of your personal life. They claim treating silver can spoil Venus along with your second and seventh houses, which rule your wealth and relationships. Similarly, gold can disrupt your fifth and ninth houses, messing with your luck and investments. The only mitigation strategy? You absolutely have to check your personal planetary support before ever entering a trade. Now, to ground all these esoteric concepts, the source uses a really brilliant real-world analogy about observation. They compare stock market sectors to physical shopping districts in Delhi. If you walk into Sarojini Nagar, you observe the underlying theme is clothes and garments. If you go over to Parganj, the theme is wooden materials. The core lesson here? Patience. By patiently observing the stock market, just like you'd watch foot traffic in a physical market, you start to uncover the underlying themes and alignments without just rushing blindly into trades. Which brings us to our final thought for this explainer. Whether you personally rely on hard data, gut intuition, or maybe even the stars, we have to ask, do your own personal natural alignments and observations play a hidden role in your decision-making? It's a highly provocative question, and it leaves us pondering just how much of the seemingly chaotic financial world might be governed by forces we are only just beginning to observe. Thanks so much for joining me on The Explainer. Keep observing,